What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex and we're going to be going over AMC stock, and we're going to be taking a look at the short sale volume today because there's some interesting data, and it just goes to show that the hedge funds are doubling down on their short positions once again, which is going to be pretty good for the ape community, especially since we like to see it when the hedge funds double down, because it just means that it's growing this short squeeze even further. So before we get started, take a look at the link in our description for our premium trade alerts. One of our analysts had 2 swing trades last week, both over 100% gain winners, as you can see here. So very profitable, and a lot of people made money off of those trades. Let's get back into the video. AMC stock sitting around $33. So we don't really know what it's going to be doing. Obviously, it could be dropping continuously because of the short sale volume that we're going to be getting to right here. As we can see, as of Friday, short volume percent is 61%. Very high. We haven't seen that high of a percentage since early June, late May, and that's when AMC really took off in price, hitting highs of almost $80 per share. But obviously we had some mini spikes over here, 55% short sale volume, and every time we saw that, we saw the price dip a little bit, but then it did recover eventually a bit. So obviously the short sale volume is pretty bearish short term, because there's going to be a lot of selling pressure from AMC stock. So we're going to be seeing AMC probably dip a little bit, but that's not anything to worry about. A lot of the ape community are looking for the dips to buy, and as you can see, every time AMC happens to dip by a significant amount, the ape communities, the retail investors, buy out those dips. Because remember, most of AMC shares are actually held by retail investors, over 80%. So there's a lot of naked shorting going on, a lot of sketchy stuff in the market, but overall there's very limited supply of AMC stock, and these hedge funds continuously decide to sell short at AMC, knowing that there's limited supply of AMC stock if they have to do so cover. So right now they definitely do not want to cover shares at this $33 price point, losing millions of dollars per week just holding those short positions. And overall, the ape community is winning this war just by holding on to their shares, as well as buying up any dips in the AMC stock price. One thing that can trigger this short squeeze is if AMC stock dips to tremendous levels, because it's going to act like a slingshot effect. It's going to force a lot of buying pressure, buying power from the retail investors, because they're going to see it as a really nice dip buying opportunity, and it's going to cause a lot of upward momentum from the apes, from the stock. And overall, it's going to trigger this massive squeeze, because shorts can't hold on to their positions forever. Eventually, they're going to have to cover their positions. And once that happens, we're going to be seeing AMC skyrocket and go to the moon. But overall, just got to hold your shares in the short term if you want to hedge your position, because right now, short term, it is kind of bearish. We have to keep that in mind. We can see here there's a lot of shorting going on, 61% short sale volume. So if you want to hedge your position, what you can do is actually sell some call options, which is going to be covered call, assuming you have 100 shares of AMC. So what you could do is you could sell a $40 covered call expiring this week. The premium is actually pretty high. Implied volatility is high, of course, 213%. And this is going to give you a really good return, and kind of hedge your portfolio a little bit. You're going to receive $93 of premium for this weekly covered call option. So every single week you could sell something like an 85% chance of profit covered call option. In this case, it's going to be around the $40 strike. You receive about $93 per week. So it's a very good way to collect option premiums and kind of hedge your portfolios a little bit if you are down on AMC stock, because remember, AMC stock is a little bit bearish in the short term, a lot of shorting pressure going on, and overall in the long term we do think we're going to win this war by holding onto our shares. If you want, you could do this $39 selling call. You receive $100.06 every $106 every single week. Putting that in perspective, that's going to be about $400 every single month right into your pocket just for holding AMC shares in the short term. But overall, very, very safe price point AMC's at. If there is a huge tank in AMC price, it could trigger off that slingshot effect that we were talking about earlier, because a lot of the retail investors, all of the apes, buy up all these dips. As we can see here, it dipped all the way to $28 per share, and the apes bought that shit right all the way up. There's no doubt about it. A lot of people do want to buy AMC dips and overall just win the war against the hedge funds. So that's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on AMC stock, and of course subscribe to the channel if you are new here. Thanks for watching.